According to a recent CNBC report, several top-ranked analysts are highlighting a small group of companies they believe could deliver strong long-term growth despite market uncertainty. And what's interesting is that these picks aren't random momentum trades. They're companies positioned at the center of some of the biggest trends shaping the economy today: artificial intelligence, cloud computing, data centers, cybersecurity, and next-generation infrastructure. Meanwhile, the broader market continues pushing to new highs. The S&P 500 has been hitting record levels throughout 2026, fueled largely by AI-related investments and stronger than expected corporate earnings. So in today's video, we're going to break down the three types of stocks that Wall Street analysts are betting on right now, why analysts believe these
Top Wall
companies still
Street
have room
analysts
to
are
run,
predicting
and what
robust growth
risks
potential for
investors should
I3
keep in mind
stocks.
before jumping
There's
in.
a lot of
Let's get
enthusiasm around
started.
these companies.
Segment
Top
1.
Wall Street analysts are
Why
predicting
Wall Street is
robust
so
growth
bullish
potential for
right
I3
now.
stocks.
Before
There's
we
a lot
talk
of
about the individual
enthusiasm around these
stocks,
companies.
we need to understand the
Top
bigger
Wall Street
picture.
analysts are
A
predicting
lot of people have
robust
been
growth
warning that the
potential
stock
for
market
I3
is in a bubble.
stocks. There's a
When
lot of
investors see
enthusiasm
companies
around these
gaining
companies.
100%,
Top Wall Street
200%,
analysts are
or even
predicting robust
500% in a
growth
short period
potential
of
for
time,
I3 stocks.
comparisons to
There's
the
a lot of
dot-com era
enthusiasm around these
naturally start
companies.
appearing. But
Top
many
Wall Street
analysts
analysts are
argue that
predicting
today's
robust
situation is
growth
different.
potential for I3
Unlike the late
stocks.
1990s,
There's a lot of
today's
enthusiasm
leading
around these
companies are
companies.
generating enormous profits, massive cash flows, and real-world demand for their products. Goldman Sachs recently raised its S&P 500 target to 8,000, citing powerful earnings growth and expanding AI investments across the economy. The firm believes nearly half of future earnings growth could come from companies benefiting from AI infrastructure spending. At the same time, data center demand continues accelerating. Major technology companies are spending hundreds of billions of dollars building AI infrastructure. We're talking about massive server farms, specialized chips, networking equipment, cloud platforms, and cybersecurity systems. Every piece of that ecosystem creates opportunities for companies supplying the AI revolution. And that's exactly where many of Wall Street's favorite growth stocks are operating today. Stock pick number 1. AI infrastructure leaders. The first category analysts love is AI infrastructure. Think about it this way. Every AI model needs computing power. Every AI application needs servers. And every server needs networking hardware and advanced chips. That's why companies connected to AI infrastructure have become some of the market's biggest winners. One standout example is Dell Technologies. Recently, Dell shocked Wall Street with earnings that crushed expectations. Revenue nearly doubled year over year, while AI server demand exploded. The company reported a massive increase in AI-optimized server orders as businesses raced to build AI capabilities. What's especially important is that Dell isn't simply selling traditional computers anymore. It's becoming a critical player in the AI ecosystem. Businesses need high-performance computing systems, storage solutions, and enterprise AI infrastructure. Dell is providing all three. Analysts believe this demand could continue for years because AI adoption remains in the early stages. Many companies are only beginning to integrate AI into their operations. That means future spending could remain elevated for a long time. And Dell isn't the only beneficiary. Numerous hardware suppliers, server manufacturers, and semiconductor firms are seeing similar tailwinds. The broader theme here is simple. If AI becomes as transformational as many experts expect, the companies building the infrastructure behind AI could experience enormous growth. That's why analysts remain bullish despite huge stock gains already seen across the sector. Stock pick number 2, advanced semiconductor and networking companies. The second group of stocks receiving strong analyst support includes semiconductor and networking companies. One name attracting significant attention is Marvell Technology. Now, Marvell isn't as famous as NVIDIA, but many analysts believe the market may still be underestimating its growth potential. Why? Because AI data centers require far more than just graphics processors. They also require ultra-fast networking systems capable of moving enormous amounts of data between servers. And that's where Marvell comes in. According to analysts, demand for high-speed optical connectivity products continues rising rapidly. As AI models become larger and more powerful, the need for faster communication between computing systems becomes critical. Marvell has positioned itself as a leader in this space. The company is also benefiting from custom AI chip projects with major technology companies. Analysts believe these opportunities could drive significant revenue growth over the next several years. What's fascinating is that Wall Street often focuses heavily on the most obvious AI winners. But some analysts believe the biggest opportunities may exist in companies that supply essential components behind the scenes. These are the businesses enabling AI growth without necessarily getting all the headlines. And historically, infrastructure suppliers have often become major winners during technology revolutions. The internet boom created winners in networking. The smartphone boom created winners in semiconductors. Now AI is creating an entirely new wave of infrastructure demand. Stock pick number 3, cybersecurity and cloud software. The third category analysts continue to favor is cybersecurity and cloud software. Here's why. As AI adoption increases, so does the importance of protecting data. Companies are moving more information into cloud environments than ever before. At the same time, cyber threats continue becoming more sophisticated. That creates strong demand for cybersecurity providers. Investor interest has been growing rapidly in this area. Cybersecurity firms are increasingly viewed as essential infrastructure rather than optional spending. Businesses simply cannot afford major data breaches, and AI itself is creating new security challenges that organizations must address. Analysts see long-term opportunities in companies providing cloud security, identity protection, and AI-driven threat detection. While some cybersecurity stocks have experienced volatility this year, many experts believe the long-term growth story remains intact. The reasoning is straightforward. Every year, more business activity moves online. Every year, data becomes more valuable. And every year, cyber threats become more advanced. That combination creates a powerful long-term demand trend. For investors seeking exposure to technology without relying entirely on chip makers, cybersecurity remains one of the most compelling sectors to watch. The risks investors shouldn't ignore now. Before anyone rushes out to buy these stocks, let's talk about the risks. Even bullish analysts acknowledge that valuations have risen significantly. Many AI-related companies have already delivered huge gains. Some stocks have doubled or tripled within months. That creates higher expectations. If earnings growth slows even slightly, investors could see sharp pullbacks. Several market veterans have warned that excessive enthusiasm could eventually lead to periods of volatility. There's also the risk that AI spending doesn't grow as quickly as investors currently expect. Right now, markets are pricing in years of strong expansion. Any signs of slowing demand could create short-term pressure. Additionally, geopolitical tensions, interest rates, economic slowdowns, and regulatory changes remain potential risks. That's why many professionals emphasize diversification instead of concentrating everything into a few popular names. The long-term story may remain attractive, but short-term volatility is almost guaranteed. So here's the big takeaway. Wall Street's top analysts continue to see significant growth opportunities in 3 major areas. First, AI infrastructure companies that provide the hardware powering artificial intelligence. Second, semiconductor and networking firms supplying the critical components behind AI data centers. And third, cybersecurity and cloud software companies helping businesses protect and manage an increasingly digital world. The common theme connecting all 3? Artificial intelligence. Whether through servers, chips, networking equipment, or security software, analysts believe AI remains one of the most powerful investment trends of the decade.